All right, what's up, guys? We're gonna go over cost basis. All right, cost basis is it's more or less a theory. It was something that I noticed back in 2022, where we were accumulating. It looked like the market was accumulating positions and then moving specific amounts up or down based off of an average area, right? In order to explain that a little bit better, it looked like back in 2022, price was consolidating in a range. That range would break out and it would move a specific amount based off of the size of the range. It would move and certain targets would hit, and then we'd notice profit taking. We would notice it retrace back to the range. So then I started looking into it more, trying to figure things out. And I was into TPO back then, still am, and noticed that JJ VWAP Trader was talking about it as well, and it resonated because I had some of the same zones on my chart that he was charting, and you can also do this on lower time frames, higher time frames, however you want to trade it. Just understand, obviously, lower time frames are going to be a little bit faster, less reliable than some of the higher time frames. But to get into the nitty gritty of it, you're pretty much going to find an area where it either appears that longer term participants are adding in positions, or longer term participants are starting to consolidate the market and nobody can break out. Nobody can break down, right? We don't move the market. We just add the liquidity into the market in order for those who actually move the market to take profit. That's pretty much what happens, right? And then I go ahead and I take it one step further. I will go over this as well. I utilize the COT report, or the Commitment of Traders report, where I look to see if when the market breaks outside of a cost basis zone or a cost basis range, if there are larger participants or smaller time frame participants like retail breaking out, and to see if it's going to be a sustainable move. Without the long-term participants adding positions on the breakouts and breakdowns, it's not really going to be a sustainable move. And you can also correlate the times, the daily candles and cost basis, the range, to the COT report to see, okay, who's adding? Is retail adding? Who's providing the liquidity for this move? And if retail is providing liquidity for the move, it is not sustainable, because retail shouldn't be pushing the market and having the market continue to move higher and higher and higher, let's say, as we're breaking out, because retail just doesn't have the account sizes and the ability to do that when we're talking about millions of contracts and open interest. All right, so if we look at this daily here, where do you see price consolidate, right? Price consolidates somewhere in this area here. So the way I look at cost basis and the way I draw my ranges, I look at an area, okay, we trend up. These two wicks here, right? I'm like, okay, these two wicks here. Where's the bottom here? Looks like the bottom we're kind of holding off right here. Somewhere in here. Now all I do is I try to get as many wicks and bodies as possible, and then I draw my horizontal channel, right? My horizontal range. So there we go. This is actually really good. I do like these, because when I look for a range, I look for a few things. We're gonna make this so it's straight across. When I look for a range for cost basis, or just range and range based plays anyways, I look for price to come up, hit a level, come back down, hit a level. So this is a little bit higher. I like right about there. So what I look for is I look for the level to break. I look for the level to break to the upside here. So notice how right here the range starts. And I don't include these wicks up here. Those wicks, it tries to break out, but there's nothing to bring the market higher. We come back down. Come back down, and we come back up. Notice how that's the spot. That's the spot right there. Somewhere right around there. That's the spot. And I say that because, yeah, there's sellers up here, but are there sellers up here or are there no buyers up here? Cost basis, you got to kind of think opposite. No buyers up here. No sellers down here. The sellers are inside here. The buyers are inside here. So this was early cost basis. I had this drawn for a while. Early cost basis was figuring we would get a range, breakdown, and then slingshot up, which we got, right? Anytime we're bullish into a trading range, we break below the range, we look for the move to continue higher if we can break the range, right? The cost basis. So from here, we're going to do two things, right? We're going to look at 419-ish on the commitment to trader report. All right, so 416, 423. These are the two reports here that came out. If we bring this over, we can look at, we had non-commercial that were long here. Okay, so non-commercial, we're adding long. We also have retail at 63% long there, which is pretty high. Retail is very high on the longs. Now, we break above, right? So we know that retail is very, very long down here. We know that non-commercial or the hedge funds, those larger speculators, are a little bit more long. They're 55% long around this area. Price moves back up into the range or cost basis. Now, let's go ahead and look at this. 516, 59, 523. So then we go back to this is the commitment to trader report for ES. I correlate the commitment to trader report on ES to NQ because NQ and ES move fairly similar. It's easier to understand the data on ES. Now, if we go into May 28th, 21st, this is the area here where mid-May and all of May, we are inside of cost basis, right? So down here, we're at May 6th. So we're going to go here on May 6th. This is going to be May 6th. And then we broke out above on May 20th. This is going to be May 20th. And then we continued here. This is about June 11th. So we're just kind of looking at these levels here, June 11th. So we're going to look at, first we're going to look at May 6th. What happened on May 6th on the Commitment to Traders report? So May 6th is somewhere around here, May 7th, perfect, right? So we're going to, go May 7th, this area here, right? What do we see? Remember before we broke below, when we were down here, this is, we'll say April 20th, around April 20th. What do we have around April 20th, right? This is April. this level here. And if we go over, further over, 55% long. Hedge funds, the larger speculators, are 55% long, which means they are more long than they are short. Obviously, right? Because it's over 50%. So that, and you have retail. Retail is fairly long. They're more long than they are short. But let's take that into consideration, right? In April, you had larger speculators, the ones that move the market, are long. Price is below cost basis. So they added some longs down here. They were more long down here than they are short. Price came back up into cost basis around May 6th to May 20th. So we're going to look at all of May on the Commitment of Trader report. Now, if we look at all of May on the Commitment of Trader report in this area here, what do you see? 49%. They covered their longs inside what? Inside of cost basis. Those longs were covered inside of cost basis. They moved 6% from long into short. Now they're net short. Now they're net short. So we know that the long-term participants inside of this area are long-term net short. So we know, looking at the numbers on the report, that the long-term participants are net short inside of this area. Right around here. In this area, they became net short. Now, as price continues to move higher, all we're going to do is we're going to take this cost basis, this range, we're going to copy and paste it. We're just going to line up the lines here. So as price started to move higher, where did we start to, what levels off of copying and pasting this are significant? The midline is a significant level for some profit taking or some shorts, because remember, net long term is net short. If they're net short and price breaks out, what are they doing? They're adding more shorts as price moves higher, right? Think about it differently. You're going to sit there and say price is moving higher. Price is moving higher. Okay, great. Price is moving higher. Well, who is moving price higher? Yeah, you're having some shorter term participants with big pockets. Some funds are sitting there and they're going long and they're making money as prices going higher. But the ones that truly move the market, the ones that are accumulating a position and then adding into that position and then finally moving the market, they're net short. The numbers don't lie. The numbers are right there, right? The numbers are right there. They are, as of May, they are net short. As of May, right here, they're net short. So we'll make this a little cleaner here. As of May, they became net short. See this? See this? We go from 50, 54, 55 net short into April, where they're net short. I'm sorry. April was, let's go back. I know the numbers are a little, they'll be a little confusing. May was right here. So May is the levels that we're looking at. They're net short. Now let's watch as price moves to see what happens, right? Look at they're net short. These here are the hedge funds, the long-term speculators, the ones that make money when the market moves in their direction. They're not hedging, right? These are not dealers. These are not producers. These are not ones that hedge the market. These are the ones that make money based off of the actual direction of the market. So they're net short as of May. We know in May, price broke above cost basis. So they're not making money. They're not making money. They are not making money. They're losing money. Overall, percentage-wise, they are losing money as price breaks higher. So now we know cost basis, they're loading in shorts. Price moves higher, they're adding more shorts, right? They're short. Where do they get to? They get to 58% short. June 4th, 58% short. So we're going to look, okay, that's June 11th. So somewhere right here, they added more shorts. June 11th. Let's continue. So we moved one range measured move. Let's copy and paste it again. Line these up. Now we're at our second range measured move. I've noticed that the second and the fourth tend to be the strongest. If it doesn't reverse on the second range measured move, I look for the fourth. So we break above the second, retrace back into it near the midline, and then continue. Let's look at these dates, right? We're talking June 20th is right here. June 25th into the beginning of July. So this is the beginning, end of June, beginning of July. End of June, end of June. So we're going to say this is June 28th, right? The retracement here, June 28th. That's July 2nd. So that's July 2nd. July 2nd. So this candle here is July 2nd. Let's look at our report again. Our report says July 2nd right here. Some of the positions were covered because we have 50.91%. We went from 58 to 50.91. Now, what happened between June 11th and July 2nd? June 11th is this candle here. From June 11th to July 2nd, we had some of those shorts cover because they were adding on their way up. They started to cover some. If you add shorts on the way up, your average, or your dollar cost averaging, your average position is going to go higher. So they could have been, someone could have been adding all the way up and then just covered some of them. But let's continue to look. They're still net short though. They're over 50%. They're net short. Now let's see where they actually become net long for a little bit. Right here. We're looking at right here. Now they are actually net long on August 6th, July 30th into August 6th. So let's look at cost basis again. We're going to copy and paste. Just keep adding them. That's 3. And that's 4, right? So we have 1, 2, 3, and 4. Oops, that's not what we wanted. So you have 1, 2, 3, 4. And now we know, to just go back a little bit, we had a cost basis form. We broke below. We came back in. When we came back into cost basis, we noticed on our commitment to trader report that the long-term participants are net short. As price moves higher, they're adding into shorts. They're adding shorts as price moves higher. Some covering occurred in this zone here at the second range measured move. We'll put this here. 1, 2, 3, 4. Right? At our second range measured move, I'll make this like a dark orange. That way we know this is the cost basis. So our second range measured move, we had some covering take place in this zone. Maybe some, who knows what they were doing. But either way, we know based off of the numbers here, we had 58% short, and then they started to cover some of their positions. And then what did we do again? We became a little bit more net short, 54%, 54%, and we ultimately reach where they are now net long. And that occurs, they became net long August 6th, August 30th. So let's go find August 6th, August 30th. Well, that's all the way over here, right? The peak is July 11th. Wow. Let's go back because a lot happened in that area. Where's our, there it is. So July, let's clean this up a little bit. So we're looking at end of July now. That's where we're at, end of July. So end of July, we net long, right? What does that mean? That means they're adding longs or they're covering those shorts. They're covering their shorts here. Then price moves down. And the biggest takeaway from this is we know that they were short, they're adding shorts, and then they became net long. You got to take it into consideration. They're not trying to long the top of the market. They're not. You have a large percentage of long-term speculators with big pockets that are always going to be long. They are always going to be long. They're holding long-term positions from way down here. You know, way down. Prices way down here. They're holding long-term positions. So now that we know that they're no longer adding into their shorts, they're starting to cover, price starts moving down. Now, as price starts moving down, what are they doing? They go right back into being net short. August 20th and August 13th. August 20th in this area. They're net short again. Price came all the way back down in the cost basis, beginning of August. So where are we at? July 31st. If we go back to the report, I know this is kind of annoying here, but if we go back to the report, July 30th, they are net long. So they started adding longs where? Right at cost basis. What does that mean? So they are still net short all the way July 23rd. So they are net short all the way here. They are still net short. Still net short. Shorts are added here. price moves higher, they're adding into their shorts, Price starts to retrace. They are still net short here. We finally hit July 30th. July 30th. They became net long. Where did they become net long? At cost basis. At cost basis. See this? They became net long at cost basis. Right here, they became long. So they're short. They're short. They short. They keep adding shorts all the way up. Their average price in their shorts, if they took shorts here, and let's say they just added at every time, their average is going to be somewhere in this middle. Their average is going to be somewhere in this middle. So then price moves back down, retraces up. If they're net short and their average is somewhere here, where are they going to add more? If price retraces back to that area. And then we come back down into cost basis. So now they're adding shorts all the way up. And then as price starts moving back to cost basis, what are they doing? They're covering their shorts as price moves back into this level. Price moves back up. Let's see what happens here around August 20th. Right when we hit this level here, August 20th. August 20th, we're going to look at that. If we go back to the report on August 20th, what do we see? August 20th, I haven't updated since then. We become net short again. Net short. So the long-term, larger speculators, what are they? Are they going long in that area or are they going short? They started to accumulate more shorts here. And where are they going to take profits? On the way down and take profits inside of cost basis. They're short. They add shorts. And then they cover their shorts back into cost basis. If price moves back up to their levels, they're going to add shorts. Correlate that to the report. Does the report lie? No, the report doesn't lie. It's numbers, right? No emotions involved. They added more shorts. And where are they going to cover their shorts? Inside a cost basis or below. Now, the final thing. I know the whole report is annoying to some people. They might not understand it. But the final thing to look at this report, we're going to go over it. It's very key, and I've been saying it. If I zoom out here, look at retail. Look at retail. Retail does not move the market. Retail provides the liquidity. If we look at all those areas from April all the way up to that August level, what is retail? Retail around April, we're going to bring this over here. Retail became long. What happened with retail as price started moving above cost basis? Because this is the levels we were looking at. Retail started adding more longs. When retail added more longs, they're providing the liquidity. They're going long, they're going long, they're going long. All the way up here. This entire area above cost basis. As price moved higher, retail is going long. Retail, the smaller, weak-handed speculators are going long. Retail provided the liquidity for price to move higher. And then guess what? As price moves lower, retail is going to start getting stopped out, right? As retail gets stopped out, they start providing the liquidity on the way down. Retail is providing the liquidity on the way down. This is a correlated, not correlated. This is an orchestrated move that they have been doing this entire time. It's been taking months and months since March and April for them to move price higher, artificially So add shorts, price moves higher, they're shorting. Retail's going long, and I was saying it's not going to be a sustained bullish rally because without having the long-term speculators, the ones with big pockets, without them being net long when they're net short all the way up, price isn't going to be sustained. It's not going to continue. They need to be on the right side of the move. They're not. And as you can see, the entire time price was moving higher. Look at open interest. We don't have any spikes of open interest. If anything, open interest is very low in consideration. We want to see it above 2.5 million. We want to see it above 2.5 million to 3 million for it to be a sustained bullish rally, which it is not. Because guess why? Retail, they're long. They're net long as price is moving higher. Price is moving higher. Retail is becoming net long. What did I say again? The long-term participants, they're net short. They're still net short in this area. They're adding their shorts. They're still short. Price moved lower. Right here, they became net long, which means they started to cover their shorts even more. This is where they covered their shorts. They were net short all the way up, net short. They're still short. Boom, they covered their longs. Or their shorts. They became net long. Where did they flip and became short again? They became short again in this area. This is where they became net short again. They became net short again in this area. Why is that significant? Significant because the second range measured move and the fourth range measured move are the most powerful. We fully retraced back to cost basis at the fourth range measured move, and we retraced when we came back up and retested the second range measured move, correlated it to the commitment to trader report, the COT report, where we noticed that the long-term participants became net short again. And where did price move? Back into cost basis. So I know it's a different type of way of looking at the market, but for these longer term moves on the daily, this is how I look at the market. I correlate it to the commitment to trader report. Is this move sustainable? Is the move currently sustainable? Right? Price is moving higher. Retail is getting long, and the longer term big pocket participants, the hedge funds, those who speculate on the moves of the market, are they driving the market higher? No, they're adding shorts. Why are they adding shorts? Because they need to accumulate a big enough position without moving the market, right? They cannot just bring price lower and just keep shorting the market, because with their size, they need to accumulate a position. So they start to accumulate, and then they continue to accumulate. And then once they have their full position size, then they start to cover their positions. And when do they cover their positions? When retail cannot sustain the move any higher. And those areas are 2 and 4. If you have a true cost basis, 2 and 4 tend to be the most powerful. If it reaches 2 and it retraces down, perfect. You want to see the report correlate. If it reaches 4 and it starts moving down, you want to see the report correlate. These markets are a little bit more volatile, so you're going to see some bigger moves. You're going to see it's going to take a little bit longer for the long-term participants, those non-commercial traders, those hedge funds, those big pocket speculators, to get rid of their positions appropriately, right? This wasn't happening this way during 2022. It was happening a little bit slower and more orchestrated. But that's what we're at now with, we're inside a cost basis, so we're going to go back to the report. I'm going to go back and watch to see what happens. Who's going net long? Who's on the right side? Who's on the wrong side? Where are they going to move the market from here? But I just kind of wanted to go over that real quick. I know it's going to be long and drawn out, But the basis of it is a position is being accumulated. And when we break, we want to see who is accumulating the position. So the long-term speculators were continuing to get short on the way up, and then they started to cover back into cost basis. We broke back above, they became net short again, and then they're going to continue to cover back into cost basis. Right? It's you got to think about how somebody with big pockets is going to accumulate a position and how they're going to get rid of that position. All right, guys. We'll make a video on the trap here, the follow-up on that.